What is up, Scan fam? Welcome to CoinScan's weekly market update. Now, if you're in crypto at all, you've been feeling the pain. These last 2 weeks have been brutal. From the SEC going after the two largest exchanges to Ethereum sitting around 1636 right now, we've seen better days. So without further ado, let's get into why we are where we are. So first here, starting with the charts, you can see we are lower than we've been since late March. We are pushing slightly above 25,000 live right now, but as you can see, it's just been downward price action ever since that top of 27,200 right here. But if we zoom out a bit right here, we still are above that 200-day moving average, which is a very key line of support. And you can see here, that's where the sprung happened from the first pump up to 25, down to 19,400, and then all the way up to just about 30K. So we'll see how this plays out. Definitely keep an eye on that 200-day moving average as it's played a key role in support previously. It will likely continue. Now that we know where we are, let's go ahead and get into today's first story. So the crypto markets drop after Fed leaves rates unchanged. Now this is very surprising, right? Typically with those speculative growth plays, you want rates to not be raised, right? Money's easier to borrow. So to see crypto fall about 5% after the Fed did not raise rates is rather counterintuitive, but let's dig into why. So after over a year of hiking rates at every meeting, the Federal Reserve left rates unchanged at a target rate of 5% to 5.25% earlier today. Bitcoin and ETH, the largest digital assets, are trading sharply lower on the news. Bitcoin is down over 3%, while ETH has dropped 5%. A broad sell-off hit roughly 2 hours after the rate decision. It's kind of a delayed effect there, which is interesting. You know, there's always some extreme volatility while Jerome Powell is speaking, but it typically takes an hour or so to truly see the direction that the market wants to go. So the market had placed a 97.7% probability that Jerome Powell would say exactly what he said. So chances are that this rate decision was already priced into the markets before the speech even happened, but it was what he said in the second part that really set the tone for the downfall we've seen. In the second part of Jerome's speech, he said there are going to be more rate hikes in 2023. The central bank's latest summary of economic projections shows interest rates in 2023 peaking at 5.6%, which is above current levels. And that's assuming increases of 25 basis points, suggesting that Fed officials anticipate 2 more rate hikes in 2023. So really the market had already priced in the announced rate decisions of that day, but what Jerome said in the second half came as a surprise to the market and unfortunately has sent us down. And really that's just been the icing on the cake of a 2-week FUD storm. Now, if you didn't see, the SEC went after Binance and Coinbase, two of the world's largest exchanges, filing a lawsuit against them for selling unregistered securities and acting as an unlicensed broker-dealer. So while these lawsuits will likely take months to play out and fully see the outcomes of the situation, the SEC was quick to order Binance to halt operations within the U.S. So to dig into the story here, on Tuesday, a U.S. federal judge refused to grant the Securities and Exchange Commission, also known as the SEC's, request for a temporary restraining order freezing the assets of Binance U.S. Judge Amy Berman Jackson of the D.C. District Court told the SEC and Binance's lawyers to negotiate terms for the exchange's operations and report back to the court within 2 days. Jackson said there's absolutely no need for a restraining order should the two sides agree on limits restricting Binance US's operations in the United States, adding that they aren't that far apart. Judge Jackson said a compromise would pose the best possible outcome for the broader Web3 industry. Shutting Binance US down completely would create significant consequences not only for the company, but for the digital asset markets in general. Jennifer Ferrer, an SEC lawyer, said the regulator is open to the business continuing to operate. So thankfully, the SEC's request to freeze the assets of Binance US is being met with some litigation. Now, the SEC's purpose is to protect US investors, and it's arguable that the action of shutting down Binance within the US would cause far more harm to digital asset investors than conducting a proper investigation and seeing where the company can improve its regulatory practices. So in short, we should see what the SEC and Binance agree to relatively soon, but it seems that Binance US will be able to continue to operate so long as the investigation goes smoothly. Now, while there are always constantly developing stories in crypto, you can rely on CoinScan to bring you the most pressing issues in real time. So while the market never sleeps, make sure to subscribe and join our communities so you can. This has been CoinScan with the weekly market briefing, and we'll see you next week.